Cheers to a beautiful Tuesday, retail trading team. I'm Mastro, and this is your routine briefing. Let's jump right into it since the day is almost over by the time I hop on here, and let's see what we got going on as we begin today's session. So, a lot of the same, yet maybe a little bit of fun being introduced into the market here. So, I'm already involved. I couldn't take it anymore. I hadn't had a trade since 11:22, and so this morning, once we lost that 45.55 support, came back and retested it. I did take this trade, so I just have to say, for purposes of say being fair to the system, this was not a perfect device signal. I was kind of playing that breakout style trade. Remember, those breakout style trades do tend to lose 60% of the time. So hoping it wins, obviously. Yet, of course, it is a lower probability trade, as all shorts are in this current market. So let's devise a plan for today. See what we have on the calendar. See what we can look for, and see if we can make some money. So you can find all my cool little resources in the description of this video, as well as that warm-up document, which I will be filling out as we get the open here. A lot of those levels are already in there. In fact, all the levels and stuff are already there, so you can follow that document all day. I keep that thing updated to make sure that we're current and staying, keeping the pace of the market. So yeah, let's devise a plan. Let's go from there. So if you look at the calendar for today, we do have a consumer confidence event at 10 a.m. That is one of those pretty red events. Red events often, almost always, in fact, do lead some type of catalyst movement. I don't know which way it's going to go. I don't think anybody knows which way it's going to go, regardless of what the news is, but definitely be watching for that. There's also Richmond Manufacturing Index at that same time, and then there's a bunch of FOMC chuckleheads that are coming on as well. So I see that actually for most of the day we have FOMC chuckleheads and stuff. Let me just bring this over here real quick. I use the Forex Factory calendar, and that's what I'm looking at here. So we could have a pretty interesting day. We'll see. Volatility is yet to uh, kind of start to uptick really at all. In fact, let me look at it here. We are actually red on volatility still. So uh, fear is just not in the market. If you read my newsletter, I go into more detail. Again, that's at retailtrading.com. Like everything else in the description of this video, you're just not seeing anybody really care. So we've had 17 out of 20 days have been green. 2 of the 3 red days, I believe yesterday's red day was like 6 points. The other one was also, I'm not sure if it's single digits, but it was definitely less than 15. So we're in this state of complacency, and the bulls do have complete control. In fact, we can sell quite a bit, and the bulls will continue to have control. So if we just want to look at that on our TPO chart, take the trade mode off real quick here, kind of see what that means. So if we try to ascertain where balance is right now, I think we're kind of right in the middle of it. I really do think the balance is right about this 55 area. That's why you're seeing so many touches. That's why you're seeing price kind of hang out around it. And when it does dip below, you're not really seeing that continuation at all. We have, at least so far. And so I think we really are trying to build this new balance at about this 55 area. So if we do see that pullback down to this support here at about 35, that's when we can look for a potential breakdown into these lower levels. But really, as long as we're above 36, we haven't even had a pullback, and as long as we're hanging around 55, we're still bouncing, and really, you're not seeing any strength whatsoever on the bear side. And again, I'm looking at 3 things all the time: price, volume, and volatility. Right now, you have volatility going down as price kind of drifts up. Yes, we're consolidating, but you're not seeing any volume suggesting any type of change of trend. So why am I short? Again, it's just kind of risk reward. I do like the short trades a lot better. They're high risk, high reward, and I'm looking for a short opportunity. So that's why I'm involved. But I have to keep saying the line of least resistance is up until you see volume increase, volatility increase, and price go lower. So besides that, we'll see how this 15-minute candle turns out. So far, it's kind of an open auction. I like to give it until 10 a.m. And if you go to that MGI document, you click on the open. I go into a little about those opens if you want to see more about that. In terms of 30-second opening range, again, super choppy. We got to see how this first 30 minutes plays out. And we got to see how we start to react to the news and those FOMC members. Not saying whatever they say is going to move it one way or another, but it's going to introduce hopefully some volatility. And obviously, I'm hoping that takes us lower, but again, it may take us higher. So watch this 55 area. A reclaim of 55 is just as good of a trade as my short. In fact, some might argue it's better because that is with the trend. So watch reclaim of that 55 area. You want to see acceptance higher, or a reclaim of the overnight low as well. But again, really the levels I'm looking at are pretty simple because there's been so much noise the past several days. Watching 65, that's really the sentiment pivot for bears. Line in the sand for bears is the 65 area. You can see it has a bunch of trend lines running into there as well. And then on the downside, this 35 for bulls. So really careful. I think that 35, that breakout lower at 35 could present a really nice opportunity if we do see acceptance. Yet again, I've said this, I don't know how many times it's routine briefing, I say it all the time. You need to see that acceptance, and you need to expect to lose a lot of those breakout trades because you are fading, especially when you are fading the trend. So yeah, that's really the levels. I like those three. I'm not really looking for anything other than those. So either the short will work out or it'll fail and I will get stopped right about, let's see where my stop is, right about 70.50. So yeah, it's another reason why I took it is because we're so condensed, because volatility is so low. I'm not worried about getting chopped out. If I lose, it's going to be a pretty convincing breakout on the bull side, and then you can always get back in. So that's how I'm looking. Those are three levels. I'll say them again: 45.35, 45.55, and 45.65 are where I'm looking to engage today. If you want to take a trade at the overnight low, I mean, I have a support right about 45 here, so I think that's a decent trade as well. Yet again, 35, 55, 65 are going to be those key levels for me today. So we'll see what happens. I will be looking for a device signal if this one does get stopped out. And again, you can see that in those documents. And besides that, I will be on the Twitters with all the lovely breaking updates, at least for the morning session. I'll throw in a set here. I got to go walk the dog. I did not walk the dog yet this morning. Shame on me as a pet owner, so got to go do that. And then I will be back and we'll hop on Twitch. So I thank you for your attention. I appreciate any engagement, be it in the comment section of this video or as a response to that newsletter. And I hope you stay classy until tomorrow.